Get this question all the time. Equity markets are at all-time highs, credit spreads are tight, we've got jobs growth of 300k. Why are we even having this conversation about reducing interest rates? Why are we?
Well, I think it's a tricky year. Coming into this year, I think the Fed thought that the economy would slow down more dramatically than what we actually saw in the first quarter. In fact, we saw a decent amount of momentum. Growth is tracking anywhere between 2 to 2.5%. And I think that they were also somewhat eager to at least start the rate adjustment policy ahead of the election so that they don't appear to be partisan. And that's what leaves them in sort of this really tough spot where the data has been performing a lot better than their expectations. And now, if anything, they might, an optimal time to cut might be in the fourth quarter, but that comes in line with the elections.
So we're taking out the cuts, we're pricing in stronger growth and maybe hotter inflation, stickier inflation, and the bond board looks like this. If we can bring it up and just go through it, Subadra, 2-year close to 480, 10-year getting closer to 450, 30-year basically at 460. How much potential is there for high yields from here?
I think it's going to be tricky for yields to continue to rise from here because I see this current environment as being very different than what we saw in the fourth quarter of last year. Fourth quarter of last year, the Fed was biased towards hiking more by the end of the year. You were also looking at an environment where Treasury supply was in the forefront. You saw a buildup in term premium because of the increase in coupon issuance sizes. And now we're in a different environment where the Fed's bias is clearly towards easing. So they've told us that they're thinking about rate cuts sometime in the second half of this year. So that, I think, kind of mechanically puts a cap on how high yields can rise from here on. The supply picture hasn't really changed meaningfully, but that said, I think that the market's going to be biased towards lower yields from here on.